Hi everyone, welcome back to Real Estate Market Minute with Macross Group. This week we're breaking down the latest numbers on national and California housing, inflation, and what's happening right now in the weekly market data. We've got four stories this week: mortgage rates and national sales, California's pullback, cooling inflation, and the newest weekly inventory and pricing trends. Let's start nationally. The average 30-year fixed mortgage rate just hit 6.69%. Its highest level in over a year, and that's the fifth straight week rates have climbed. That's putting pressure on sales. Existing home sales dropped 1.7% from June to a 4.06 million annual pace, even though prices keep climbing. The median price hit $434,100, up 2% from last year, after June set an all-time record at $442,800. Prices have now risen year over year for 37 months straight. Inventory is still tight nationally, only a 4.6-month supply, below the 5 to 6 months considered balanced, and first-time buyers made up just 29% of sales, well under the historical norm of around 40%. So what does this mean? Buyers are facing real affordability pressure from both prices and rates. Sellers may see a smaller pool of active buyers. And for investors and homeowners, tight inventory keeps supporting prices nationally even as the pace of sales slows. My take: when rates and prices squeeze affordability at the same time, buyers who have financing lined up in advance are in the best position to move if the right home comes along. Here in California, sales pulled back even more sharply. Existing single-family home sales fell 6% from June, the lowest level in 6 months. The statewide median price dropped 1.9% month over month, slipping below $900,000 for the first time in 4 months. It's still up 0.3% from a year ago, though, the third straight month of annual gains. C.A.R. points to higher rates and recent financial market volatility as the main drag on demand. For buyers, there's a bit of breathing room. For sellers, it's a reminder that accurate data-informed pricing matters more when momentum slows. And for homeowners, values are still higher than they were a year ago. Worth noting, conditions vary block by block, so a statewide number doesn't tell the whole story for every neighborhood. Next, some encouraging news on inflation. The annual rate eased to 3.4% in July, down from 3.5% in June, with core inflation slowing to 2.46%, its slowest pace since March of 2021. That said, prices are still outpacing wage growth for a fourth straight month, which can strain household budgets. On the flip side, cooler inflation gives the Federal Reserve more room to maneuver, and the report notes it supports expectations that mortgage rates could ease gradually over time. That's context, not a guarantee for any individual situation. Finally, this week's Altos Research snapshot. National inventory ticked up to 871,063 listings, while the median list price edged down to $445,000. The share of listings with price reductions rose to nearly 42%, while days on market held steady at 63 days. For buyers, that means a few more options and some room to negotiate. For sellers, it's a signal that sharp, proactive pricing matters as we head toward the typical seasonal slowdown. That's your market minute for this week. Rates near a one-year high, California cooling off, inflation easing, and inventory slowly building. As always, reach out anytime with questions about what this means for your specific situation. Follow us on Facebook, Instagram, YouTube, X, and LinkedIn at Macross Group. Drop your questions in the comments. We'd love to hear from you. And remember, this video is for general informational purposes only and isn't legal, financial, or professional advice. Thanks for watching, and we'll see you next week.